Hi guys, Andy here. Let's have a look at the S&P 500 futures. For the record, today is Tuesday, November 28th. Time is around 6:15 p.m. GMT. So it's been a while. I was doing some other stuff, but yeah, actually not much happened across the markets for quite some time now. So since more than 1 week, we are just ranging here, doing nothing. But today, recently, we just got some kind of move that might be of interest. So therefore, I think it's a good moment to jump in again to have a look here at S&P 500, what we can expect. But first of all, let's start in the higher time frame as it has been a while. Let's go to the weekly chart. And so my take on the S&P 500 is that we made a wave one right here, wave one in the higher degree, coming from the March 2020 lows. And then after this wave one, I believe we did a corrective move down as an A, B, C. We touched the wave 2 area, fulfilled the minimum requirement for a wave 2, the 0.5 FIB retracement. And so now we might be working here on the wave 3 in the higher degree. So after this wave 1 here, this wave 2 down, we might be preparing for a wave 3 in the higher time frame. But of course, we do not go there as a straight line. We should go there again in 5 waves because a wave 3 is an impulse. And so now what could be here is I'm considering two scenarios. One scenario which is actually following the Dow Jones, and then it would mean that this high right here was a wave one, that or wave one was finished right here, and that we are currently working on the wave two. So as an corrective structure, leg down, leg up, and then we should have another leg down going into this area. Or we might be following the count in the Nasdaq, and then it would mean that this here was a wave 3 high, this here a wave 4 low, and that we now need another high. This here is our fifth wave that we need to take out the high right here to finish this wave one. So in the higher time frame, these are the two scenarios I'm basically following. There might also be another scenario, a scenario which is less likely for the moment, but still possible, in my opinion. It could be, as long as we do not take out the high right here, that we are actually still working on this wave 2 correction. And that would mean that we have like a corrective move down here as a wave A, like 1, 2, 3. Then this here is our wave A. Then this here could be our wave B. Then we are actually having like a regular flat in the higher time frame. So this corrective move up as a wave B. And then from here, we should expect a wave C down, taking out the wave A low right here. And so that would mean that our wave 2 low is not in yet, but that we will make the wave 2 low deeper into this area. And so if this is the wave C down, then this could be our wave 1, this is the wave 2. But then, as you can see, we cannot take out this high here, of course, because then this setup would be invalidated. But if we would not take out the high right here, then this can be or wave 1 of C, wave 2 of C, 3, 4, 5, taking out the low right here, going deeper into this area. This might be a possibility. It's not on my chart because for the moment I prefer to consider these two scenarios here, the scenario in red following the Dow Jones and the scenario in green following the count in the Nasdaq. Okay, now let's have a look at the daily. So here in the daily chart, you see in more detail what I was just explaining. So if we follow the count in the Dow Jones, then it would mean that our wave 1 high was in right here, that we are now doing an A, B, C structure. So our wave A here then is 5 waves down, 1, 2, 3, 4, 5. We are doing wave B, and then we should get another impulse down, another 5 waves down, taking out the low right here. Then this here, the wave 2 right here, should be into this area. And this is the area that we can find by taking the length of our wave 1. And then we know that the wave 2 is supposed to go into the area between the 0.5 and the 0.854 FIB retracement. There's also another possibility, let's say the bullish possibility, the bullish scenario indicated in green, where we will take out the high right here, the wave 3 high right here, and therefore we go to the 4-hour to explain this in more detail. That scenario would mean that from our wave 3 high right here, we made a triple tree correction as a W, X, Y, X, Z structure. As you can see here, this is the wave 4 area. So if we take the length of our wave 3, then we know that the wave 4 is supposed to go into the area between the 0.146 and the 0.618 FIB retracement. And as you can see, we, let's say we respected this area, which makes that we can actually have a wave 4 low right here. And then from this wave 4 low, we can actually have an impulse up to make a wave 5, or even if this is, let's say, a big wave 5, this could actually still be the wave 1 of the wave 5. So 1, 2, 3, 4, 5. But it can also be the wave 5 itself if we take out the high right here. So therefore, we are looking with much attention to the structure we are having here, because if we have an impulse here, that would be a good indication of working on the wave 5. If we do not have an impulse right here, the structure we are seeing right here, if this is 3 waves instead of 5 waves, then this is actually corrective, this move up, and then we can favor the scenario here in red, counting or interpreting the data here as an A, B, C structure, and then from the area we are currently at, we could expect a wave C down. So another important area here in the 4-hour, as you can see, is this area as indicated in red. This is actually the area where we should expect the end of the wave B. the area between the zero point 0.5 and the 0.854 FIB retracement. As you can see, for the moment, we are on top of this area. This is still okay, I would say. Like, this does not make the wave B invalid. Remember, these are only guidelines. The true invalidation level is, of course, the high right here. If we would take out the high right here, then it means that this structure here can no longer be a wave B. So let's have a closer look at the structure right here. For the moment, we had, or earlier today, we had an interesting move. So last week, we made here the high right here on Wednesday, November 22. And already back then, I don't know if I made a video on the S&P 500 on that day, but at least if it was not the S&P 500, I told you for the Nasdaq that this here could be the end of a structure. And so what we did earlier today, we saw an up move, and we actually respected this high right here. So I believe if we hold the high right here, that the structure we are seeing from this low is actually three waves, A, B, C, which means it is corrective. If we would take out the high right here and ending with divergence, then it is also quite clear to me that we definitely have five waves up. One, two, three, then here the four, or maybe we are still working on the four, and then a fifth wave up. Even if we take it out like marginally, I would see this, especially if we look at the 1 hour, as like a new cycle from here. Like we did this RSI reset. This typically is evidence for a new cycle, and so then it would mean we actually have three cycles: one, two, three, and so that would mean three impulsive cycles that we have five waves up. So therefore, interesting to look at this for the moment. Do we hold it? Do we hold it not? I do not say we have to break immediately. Remember, this here is wave 4 area. So if we take here the length of our wave 3, then we know that the area between the 0.146 and the 0.618 FIB extension, FIB retracement, I'm sorry, is the wave 4 area. So we could actually see if we get five waves up right here, then what we like, then we can still go deeper into this area before turning up again. But so far we had quite shallow retracements in the S&P 500 in this structure right here. So it might also be the case that our wave 4 is again a shallow retracement. If we take out the high right here, so if we have five waves, then I believe this here would be an interesting area to look at, an area from where we can expect a reversal, the area from where we can expect the five waves to end. And this is actually the equal leg area here of our wave 1 and our wave 2. So if we take the length of wave 1, the length of wave 2, then this area here between the 1 and the 1.618 FIB extension is the area from where we can expect reaction to the downside. And then, yeah, that would actually be quite a logic area to have reaction. It would mean like that we are more or less at this resistance. Uh, like, of course, we can go a bit above this resistance. If we take out the wave 3 high right here, this is also typically a moment that we can expect a reaction, like taking out a high often causes a reaction to the downside. So therefore, I would pay my attention to this area in case we take out the high right here. Maybe this happens the next hours, maybe it happens the next days. Then we would have a bit more retracement into this area before taking out the high right here. And if we would not take out the high right here at all, then this is also very interesting because that would favor the case where we have 5 waves down here as a wave A indicated in red. Then I would call here for the wave B, and then we can actually expect 5 waves down from this high, taking out the low right here, deeper into this area. Okay, that's my analysis for now. If you enjoyed it, please like, subscribe, comment to support my work. And I see you one of the next days for another update on the S&P 500. Have a nice day. Bye bye.